Welcome back to a brand new episode of Gen Z BTC. It's me, Satoshi Guapamoto, and today I'm bringing you guys a brand new series, all right? This is FUD Fridays, Fear, Uncertainty, and Doubt. FUD Fridays. And every Friday, I'm going to be answering a question that a lot of people have about Bitcoin when they're first getting started, right? If you're a Bitcoin OG, this series might not hit the same for you, but for the new people, especially when people start searching for Bitcoin again and when the price starts ripping, they're going to want to find playlists where they can answer a lot of their concerns and questions very quickly. So one of the biggest ones that people seem to have is Bitcoin a bubble? Right? And today we're going to go over why this question is actually very reasonable, right? But why this fear, this uncertainty, and this doubt can actually be quelled by looking at history and by going over a little bit about what Bitcoin actually is. So if you enjoy this series, make sure you like, comment what you want to see next on FUD Fridays, and then I'll get around to making a video next week. So let's get into it. Is Bitcoin a bubble? First off, let's define what exactly is a bubble, right? Investopedia roughly defines a bubble as a economic situation where you have a stock, a commodity, a bond, a piece of real estate, whatever it might be, go up in price in a way that is irrational, right? There is a speculative demand on the price of something while its intrinsic value or its true value is not actually what that demand is saying that it is. So eventually the bubble burst and everyone loses a lot of money, at least if you bought near the top, right? Essentially, the asset value is inflated far beyond what it should be, and then it comes back crashing down to what it should be valued at, right? Where it should be appropriately valued. Typically, bubbles are characterized by going up really fast and then never coming back and crashing down really fast. Right. So we're going to go over a couple historic bubbles. Famous one is tulip bulbs. Essentially, people were investing in tulip bulbs back in the day for whatever reason. And essentially, the value of tulip bulbs was massively inflated. There was a bubble and then it popped. The price never came back. Beanie Babies, another example, they were rapidly inflated in price. People thought they could be collector's items and that they were going to gain value over time. People were hoarding their Beanie Babies. People were paying exuberant prices for Beanie Babies. Then the Baby bubble, say that 3 times fast, popped and it never came back. And now it's over. Another example, the real estate market back in 2008, that was a bubble that it popped, but that one actually did end up coming back, and I'll get back to that in a minute. Same with the dot-com bubble. Now, many of those stocks in the dot-com bubble never came back, but certain tech stocks like Amazon, Apple, Google, they were just fine. Even though they were part of the dot-com crash, they were able to come back due to the value that they presented. But other stocks like pets.com, right? It was part of the dot-com bubble. The value that pets.com could present was not as great as what was determined by the market, right? And the market continued to determine that pets.com did not deserve the valuation that it had. But over time, given the value that Apple, Google, and Amazon brought to the world, the market continued to realize, wait a minute, these actually do deserve the valuations that they had. So that's why they were able to climb back. Is Bitcoin a bubble? Well, Bitcoin has crashed down in price many times. It's gone up and down and up and down and up and down. But the real kicker about Bitcoin and the reason why Bitcoin can't be deemed a bubble based on its monetary performance is because of the fact it always seems to break its previous all-time high, right? It's always breaking the last all-time high. Even crashing down from 20,000 to 3,000, going back up to 69,000, down to 15. And now once again, we're at 69,000, ready to break out even further. So Bitcoin can't be characterized as a bubble based on its price performance and fluctuations because its volatility is actually a feature and not a bug. When you have volatility, that is the lifeblood of your investment. That is the lifeblood of the Bitcoin network in terms of its monetary power, in terms of its store of value power, right? If you have something that's going flat, something sideways like this, there's no real way to make money off it. That's why bonds have traditionally been a horrible investment, especially when applied against inflation, right? You want something with volatility because those swings are the lifeblood of the market. That's where you're actually able to create and gain value in the market. Look up Nvidia stock, look up the QQQ, the NASDAQ, look up Apple, all these things, they're not flat, they're quite volatile. Even if you were to say something like gold is a store of value or the dollar, look up the dollar's value over time, look up gold's value over time, look at a 20-year chart of gold's value. Is that really stable? Is that flat? No, it's not flat. It's going up and to the right. It's going up and to the right, the same way Bitcoin's does. So another thing, another concern people have is the comparison with traditional assets. Like I just said, stocks, other commodities like gold, real estate. But you have to realize that Bitcoin is an emerging technology. And many of these stocks, like I said, lost 90% of their value. Apple lost 90% of its value back in the day. Amazon lost 90% of its value. MicroStrategy lost 95% of its value during the dot-com bubble. But they're able to come back based on their qualities, based on the value that they provide to the market and to people. Same with Bitcoin, right? What value does Bitcoin offer to people? Well, we'll get into that more, but essentially it is a global payment network, and it is also a great store of value compared to other assets. Bitcoin has been the number one performing asset 12 out of 15 years. Not number two, it has been the number one performing asset over everything. And not only does it beat everything, it easily beats them by huge margins. Moving on. Once again, volatility is part of Bitcoin due to the fact that it is an emerging technology. So as people are beginning to discover and use Bitcoin a little bit more, there's more people who are jumping in and out trying to trade, but there are people like me who are holding forever. People like Michael Saylor who are holding forever. People like BlackRock and other institutions, many of which will be holding for a very long time for reasons that we're going to get into. Intrinsic value and scarcity. So one of the things that people say about Bitcoin, once again, is its intrinsic value is non-existent. Therefore, it has to be a bubble. Whereas, something like I guess a house has intrinsic value because it's a house. You can live in it. The real word to use there is its utility value, right? A house has utility value. What utility do you get from a house? Well, I can live inside of it. I can also rent it out to generate a cash flow. What intrinsic value do stocks have, right? They really don't have any intrinsic value, right? Stocks don't really do anything, right? They are a representation of a company, and the company itself is a productive asset. The company is productive. The stock is just something that's issued to shareholders so that way they can be a part of the productivity. But the stock itself doesn't really have intrinsic value. It has a monetary value. Gold has no real intrinsic value. All right. Gold is a precious metal that doesn't rot. But when it comes to utility value, gold has a lot of utility value. You can use it in different technologies. It's a great conductor of electricity, and you can use it as shiny jewelry, right? But the intrinsic value that we place on things is subjective. So a cup of water will be intrinsically more valuable to someone who is dying of thirst than it is to someone who has just drank a cup and doesn't want to drink any more liquid. So when we talk about intrinsic value and different valuations of Bitcoin, we need to focus on its properties as money and its utility as a payment network. And the base layer of Bitcoin already works as a payment network. And on top of that, we built the Lightning Network, which is a faster version of Bitcoin that you can use for day-to-day transactions. So that's part of where a lot of the value comes from for Bitcoin. And the fact that it has a fixed supply, there's only 21 million, which means that no one can make any more. So all of the demand for Bitcoin has to fit inside of that 21 million. No one can make any more, no one can print anymore, and no one can take it from you. So all of these make it a pretty good money, and they make it pretty valuable. Widespread adoption is still taking place. That's part of the volatility, and it's part of the use cases, especially if you live in a country that doesn't have applications or support for things like Western Union or Venmo or PayPal, right? There are billions of people globally who are unbanked, right? Who have access to internet. They have access to an internet connection, but they don't have access to financial institutions that are high level custodian grade and are able to take on the bandwidth that requires, billions of people to be on their network, right? Not every place has that. Here in America, we're very privileged. We have Bank of America, we have Charles Schwab, we have Fidelity, we have BlackRock, right? We have all these different institutions and avenues where we can store our value or save our money, or get loans or get lines of credit. But there are billions of people globally who do not have access. They don't have the infrastructure for something that can support billions of people. Bitcoin can support an infinite amount of people because of the fact that the network will always generate a block every 10 minutes as long as the hash rate continues to increase, right? Which it has been doing. The hash rate for Bitcoin, which is essentially the security of the network, the energy used by the network, has always gone up and to the right. And the price has followed suit because the energy that's being put in the Bitcoin also helps to sustain and defend the network, thus increasing its security, right? Which also increases its value because it becomes less uncertain. It becomes less risky. Institutional investment is another big reason why Bitcoin is not a bubble. We have more and more large players like Tesla, Grayscale, Fidelity, BlackRock, who are realizing that Bitcoin is an asset class in and of itself, right? It's not just a commodity, it's its own asset class, and it's redefining the way that we look at finance. And this is becoming a huge mark in the 2024 bull run, right? Because this is the year of institutional adoption. Long-term appreciation and network effects, right? Bitcoin has a huge network effect. That is why other cryptocurrencies, other copies of Bitcoin cannot catch it. The network effect of Bitcoin is too big. Bitcoin already has too many users for any other network to catch up. And because Bitcoin is digital money that can be upgraded and updated, any other digital money that has any sort of, I guess, values or abilities that Bitcoin might not have, it can just be updated and integrated into the Bitcoin protocol, right? Even though Bitcoin is extremely hard to change, if there is a great need for a change, such as quantum resistance, right? Bitcoin is capable of doing that. That's going to be another video that we probably do, quantum computers. But because of the fact that Bitcoin is upgradable and because it has the strongest and biggest network effect and the biggest market capitalization and the greatest distribution of coins, it seems like nothing can catch Bitcoin. The network is just too big. It's too decentralized. It's too hard to stop, right? You can't confiscate everyone's Bitcoin. You can't turn Bitcoin off. You can't make something that's bigger and better than Bitcoin because this tech is always being upgraded and it's already ahead of the pack by too much. And then finally, Bitcoin as a hedge against fiat devaluation and inflation, right? Bitcoin is not just a hedge against inflation. Bitcoin is the cure for inflation because of the fact that it's actually deflationary in nature due to the fact that there's only 21 million, right? Since there are only 21 million Bitcoin, that means that the price of everything relative to Bitcoin will always fall because the value of Bitcoin is constantly increasing due to the increase in demand. Whereas in an inflationary society, right, where we have an infinite amount of dollars that can be printed, you can essentially have prices rise up forever. That's not just me saying that. The Minneapolis Fed, the Federal Reserve of Minneapolis, they literally released this paper saying that Bitcoin is a threat to the dollar being the only non-risk issuable security, right? Essentially, they talk about how they can run deficits bigger and bigger forever as long as there's no competitors to the dollar. And that's why Bitcoin should be lobbied against and voted against. That's literally something that they said in the paper. I'll link it in the description. They are scared of Bitcoin because of the fact that it has a truly limited supply. There cannot be any more than 21 million. And there's only 6% left to be mined. All the other 94% have already been mined. They've been bought, they've been sold, they've been traded. They're held by people who have them in cold storage. Some of them still have them on exchanges. Some of them have them in hot wallets. But all of that Bitcoin is already in the network. It's already been dispersed and there's not much left. And because more and more people are coming to the network and there's only 21 million, there's 8 billion people, there's not enough for everyone. The price of everything has to be crammed inside of those 21 million, and prices fall against this scarce asset, whereas prices constantly rise against the infinite asset, which is the dollar. And that's why we have inflation. Inflation is the process of US dollars going down in value due to their devaluation. That makes the price of everything seem like it's increasing, but really it's the paper money that's losing value. You need 5 pieces of paper to buy a loaf of bread today, whereas back in the day you only needed 1 piece of paper, right? The bread is the same. It's made the same way. Nothing's changed. The dollar, the pieces of paper have changed, even though they might look the same. They have a way different value. And these are some of the reasons why Bitcoin is actually not a bubble. Don't just trust me. You have to do some of your own research as well, but you're going to come to the same conclusion. But it's important to get into the habit of doing your own research. And if I'm saying something that you disagree with, leave a comment. Let's have a discussion. And if I'm saying something that you like, then go ahead and like the video. Make sure you comment and subscribe. Share it with someone who you think might also enjoy it. And I'll see you in the next one. Give me some suggestions for the next episode of FUD Fridays, and I'll see you guys then. Stack sats or die trying.